One of the tough things in trading is making sure that the thing you trade or the strategy you've created for yourself is gonna work. And today I have a framework for you to kind of go through and test and apply to improve the chance that your strategy is gonna work in the market. What's up traders, welcome back to Krabi in Thailand. Today I want to share with you, as I said, something that is going to make a big difference if you have a strategy right now but you're not sure it's going to be profitable or not. You want to prove to yourself that it's going to be profitable or to other people, and that's kind of a tough thing. So I want to share with you how I would do this myself, how to prove that your strategy will be a good one and working in the market. And that requires, in my opinion, 5 steps you have to apply properly. So the first thing first is, if you want to make sure your strategy is going to work in the market later on, think of applying what we talked about earlier in other videos, which is the strong principle. And this is a kind of a multiple step framework of like how to make sure your strategy is going to be working in the market. So each letter of the word strong stands for something. I'll put a link below to an article on that. I don't want to go through this for now, but very important to do. So basically you want to look if it's going to be specific, tested, replicable, organized, non-complicated, as well as grounded. Those are the 6 letters of the word strong, and you can go through this. I'll put an article below. You can go through and see every detail for every part, but that's something you want to think about first. Now once you've done that, next step is you're gonna have to backtest something, and a lot of people are gonna backtest a little bit just to get the result, like quickly, 20 trades and that's it. But I would recommend you go for at least 100 trades and at least over 10 years if you can. So if you're gonna backtest something that is automated, very simple, like it's gonna take you 2 minutes. But if you do it manually, it will take more time. By the time you invest in now for doing this, it's gonna pay later. So you gotta keep that in mind. The fact that you might do something now that doesn't pay now, but it's fine. It's not about getting the result today, it's about getting the result later. So backtest for at least 5 to 10 years, get those results in, get those stats in, and then you can move to the other part, which is you wanna optimize your strategy. Now optimizing is kind of a big thing, but I would recommend, so if you can find tweaks that you can make in your strategy, if you backtest with the script, you can optimize with that script, okay? If you backtest manually, it's gonna take a little bit more time to kind of optimize and go back and do stuff, but you can still do it. Okay, so if you can optimize, do it, and try to find ways to make your strategy better. Just make sure that you kind of not only look at what you think is right, but what the market shows you that's right, and use that instead of what you think is right. Of course, you never want to over optimize, that's just basic, but you want to kind of optimize so that it's going to work to a certain point. Now step number 4 is from there. So you've created something that's strong, you've backtested it, you've optimized it. Now you want to do what we call an out of sample test, which is you take what you have, your strategy, and you test it on data that you didn't backtest it on. So for example, if you backtested from like 2000 to 2015, then test it out of sample on 2015 to 2019, and just kind of use that data as a out of sample backtest. So that's kind of data that you didn't use, because you want to make sure that you've optimized it for some time, but that the optimization works in the future too, not only in the past. And it's something that's really kind of people forget all the time to do, but if you can do this, you increase your chance by a lot of getting good result when you trade it live. Okay, if you only kind of optimize on all the past data, you do what we call a curve fitting. So you fit your test to the past data, but you gotta be able to verify that your optimization works on future data, so data you didn't use to optimize it first. So kind of a tricky point, but it really makes a big difference. And finally, step number 5 is, once you've done all this, so you have a strong strategy, you've been able to test it, optimize it, test it out of sample, now you want to be able to demo trade it, because you want to see that you can execute it right. Some strategies work really well when you go back on the data. You can, like, there's no rush, you can take the trades you want to take. But in the live market, maybe you don't see things the same way, or maybe there's more stress or some things that you didn't think about before. So you want to be able to take trades yourself manually or with a script. You will want to make sure your script works fine, otherwise it's going to be a mess and you won't like it. So make sure the script works, test it out in the market, and get that data in to be able to see if you can do it right. So guys, those are the 5 steps. We went through those quickly, but I'm not here to waste your time. I want to make sure you apply this properly and get results. So comment below with your thoughts on this. If you have any questions, comment below and I'll answer them for sure. Here are a few comments in the past video. I appreciate you guys for leaving your comments as always in the comment section. Don't forget to subscribe if it's not done yet. And I'll catch you back here in Krabi for another video tomorrow. Ciao.